Good afternoon, everyone, and good afternoon to the host as well. So I hope you guys are able to see my screen. Please confirm, and you're able to hear my voice as well. Okay, great. So people will be wondering, like, and what this guy is going to be doing in an algo session, what this guy is going to be talking about scalping and other things. Yes, even I was wondering, should I be really presenting myself when, like, and the entire crowd is going to be packed with algo, the strategies and whatever that has been like and going on, how you can do some selling, how you can like and improve your ROI and so on. Guys, as an like a scalper, my primary goal is to identify some setup. As an option buyer, we always look for some like an interesting setup and which can give you consistent returns. So in today's session, I'm going to be sharing you like a little bit of an what to say, an oversight of what I do. Mostly I trade in like an Nifty and Bank Nifty. And the most important thing is my setup is pretty simple. And you will be seeing it, why I do it and how I do it, what are the things and what are the parameters which I look at to take trades. Okay. And also like, and I'll be showing you all the trades which I would have done it today so that you will get a complete insight on what are the parameters which I look at to take a trade and how the things are going to be happening in the second hour as well. Okay, before we move on, I'll just give you a quick like a disclaimer. I'm an ISM certified professional for equity derivatives, but I'm not a SEBI registered advisor. So any information which you guys are going to be looking at is going to be for educational purposes only. Please do not trade sales solely based on this information. Option trading have large potential reward and large potential risk. You must be aware about the risk before you take trades in the market. Past performance of any trading system or methodology is not necessarily an indicative of future results. I'll just give a quick demo on how I do it and what are the things which I look at it. As an option buyer, earlier I used to lose a lot. Like many people will be saying, right, like an option buyers can never make money and you guys are going to be losing it left, right, and center to the sellers. Yes, I fully agree. Sellers are the ones who are going to be like in controlling the market. They are going to be like in having all the advantage. The reason is he's the one who's creating this product. So when an option player, as a buyer who gets into the market, he needed to understand he is playing against the system wherein who is going to be giving you the product, he is going to be controlling it. So in that scenario, I needed to know what are the things which can help me to take a trade. Okay, so I basically look at few things to connect my dots. When I say few things to connect my dots, these are the things which has to be aligned together. Not necessarily everything has to be aligned. At least 80% of the information need to be aligned for me to take a trade in a confident manner. So normally, what are the things which I normally look at? First and foremost, the Dow. Okay, so many people will be wondering why you needed to track the US markets when you wanted to trade in Indian markets. The reason is US is the mother of all markets, and whatever the things which is going to be happening in US, and it is going to be reverberating across the world markets. So that's a reason I normally like and track the US markets. And even when I got into the market in 2007 with no idea about the markets, my friend told me, Shiva, first thing which you needed to be looking at in the morning is going to be on the Dow futures, because that is going to be giving you a trend, what is going to be happening. When I say the Dow, I will look at the post-market data of yesterday, the close happened in US markets, and what is happening in the current. Unlike Nifty futures, Dow futures is a traded instrument, so it will have a lot of value. So if you look at the current Dow futures, I believe it is trading somewhere around minus 65. But yesterday we had a good close on the Dow, close to 300 points. It was closed in the green territory. So there is not further fall which has been happening. From morning, it has been hovering around like a 20 to 60 point range. It's not falling much. So first reason, Dow, it is not extremely bearish, but it is little bearish. For me, that is first point. Next one, India VIX. If it have been seeing the India VIX story in the last 1 week or so, it has been consistently like and falling from 25 odd zones. It has been consistently falling. A couple of days back, we were at like in 24 and slowly 22. And then now we are at almost 20.5. So now India VIX is on the bullish side for me. When the market is moving higher and if the VIX is falling, that's a bullish sign. As an option buyer, I will be very happy to go on the long side. Next one, the OI spurts data. Talking about the OI spurts data, I'm a big believer in OI. I don't know how many of you would believe in OI, but I'm a big believer in OI. So this OI data, the OI spurt is going to be giving me all the right clues where I needed to position as a buyer. Imagine the market is going to be filled with buyers and sellers. We needed to know as a buyer which side I needed to stand with, and as a seller which side needed to stand with. Today, if you look at the like in OI Spurts data, it is clearly giving you a clue that the long buildup is happening on the call side and the short buildup is happening on the put side. Don't look at this particular one. The reason is that might be used for the hedging. That's the reason it is still figuring in the short buildup category. Don't worry about that. But here, I have certain parameters that I needed to get fulfilled. What are those parameters? If I wanted to be extremely bullish, normally I will look at like a 50% increase in OI, 50% increase in price from at the money, 3 strikes above and 3 strikes below. But mostly as an option buyer, it's better to avoid the OTM strikes. OTM strikes always have the like a pleasure for the like sellers to create more position and then trap the buyers. That was one of the biggest mistakes which I was doing in early part of the career. What I was doing, I was concentrating on the quantity rather than the quality. For me, the quality is always at the money and in the money and deep in the money. When I say deep in the money, don't go on like a 1,000 rupee strikes or 1,500 rupee strikes where there is not going to be any liquidity. Always concentrate on the strikes which has a liquidity. So where exactly the liquidity is available? This is going to be available near to in the money and at the money. If you are going to be looking at the option chain, you will be able to see it. The maximum quantity or the OI change would be happening at the money and in the money. Very rarely you'll be seeing like a deep in the money or deep OTM strikes. The pure reason is that might be used for the hedging purposes as well. In this scenario, if you look at it today, the maximum OI change has been happening at 36,300, which is close to 13 lakh like a quantity which is got us added now. And overall, if you look at the volume as well, if I wanted, I will just add the volume as well for you. And you can clearly see the volume of action is happening at 36,500. So the most important element is you needed to be playing in an area where most of the action is happening, because that is where you will be able to get a quick move. What is scalping is all about? Scalping is all about getting in, getting out. So if you are like a player, which 90% of us would be doing scalping without even realizing that you are a scalper. So scalping is all about getting into a trade, making quick bucks, get out, and then don't, whether it is a profit or loss, try to get out of your position at the earliest. Any trade which goes beyond 30 minutes, then I wouldn't consider it as scalping. Then you are getting into like a positional play on intraday basis. So if you are a scalper, remember you needed to enter, exit, do all the things that needed to be done within 3 to 5 minutes maximum. 90% of my trades would be less than 3 minutes. Very rarely I'll be holding it beyond like in 15-30 minutes, unless and until that particular day wherein we see like a large momentum happening, and that particular area is going to be a little bit of a gray area. The reason is, whenever I hold my trades beyond like in 15 minutes to 30 minutes, 90% of the time, either the trades have gone big profit or in a big loss. So always remember, if you are sticking to a particular setup, either be it positional or be it like an intraday or be it a swing trader or be it a scalper, stick to it with discipline. Once you break the rule, even on one single day, you will automatically see the system's going to be punishing you. So today, the most important element is the market is playing on the call side, like in people who are a buyer who would definitely be buying it on the call side, and then the people who are selling, they would be doing the selling on the put side. So how do we know that these guys are selling it? That is where the OI Spurts data help you. When the market is moving higher, along with the price moving higher, that means there is a demand. Someone is creating a position and some buyers are coming in and buying it, thinking that I'm going to be getting more and more reward. Let me buy it at a premium. Okay, so if you look at the premium, like in a tab, I'll just show you what is the premium which is there on the market at this current juncture. So at the money is trading with close to 250 rupee premium. Remember, tomorrow is the expiry. With 1 day to go for the expiring, 36,300 call is having a 250 rupee premium, which is clearly suggesting there is a buyer who comes and buys 36,300, even with a 250 rupee premium, thinking that I'm going to be getting another 250 rupee move by tomorrow for me to get this money back. Okay, imagine if there is no movement at all. Okay, the next 1.5 days, the market just stays where it is. This entire 250 rupees on the call side, the entire 240 rupees on the put side, it's going to go into the writer's pocket. When I say writer's pocket, the seller who's creating the position. But this is where most of them tend to lose out as an option buyer, because we are playing against a system. Imagine if the market doesn't move anywhere, the futures doesn't move anywhere, the entire money goes into the seller's pocket. So as a trader, we needed to know whether this move is happening with the volume or without the volume. If it is happening with the volume, with a good increase in terms of the percentage of increase in terms of the price and the OI, then I will go along. Imagine if the move is happening without much increase in OI, much increase in price, hardly like in 5-10 rupees move, that is like in 5-10% move, then there is no point for me to go and participate in a rally which is not going to be ideal. And moreover, always remember on Wednesdays, try to avoid any major positions, especially in the second half. If you're a trader, try to do all your things in the morning, because usually the second half is the area wherein you will see the biggest theta happening. Usually it happens on the Tuesday afternoon and Wednesday afternoon. But Wednesday afternoon, it happens big time when the premiums are going to be higher. Normally, they head into the expiry with like in the IV level somewhere around the 20 to 25 range. Currently, if you look at the option chain data as well, that's what it has been suggesting. It is trading somewhere around 29 to 28. And I will show you like in how you needed to be looking at the option chain data as well in terms of like in IV data. So OI spurts clearly telling me, Shiva, you needed to be on the buyer. If you're a buyer, be on the call side. If you're a seller, be on the put side. Okay, perfect. Is the market also like in saying the same tone? Yes, as of now, it is saying the same tone. When I say saying the same tone, I will normally be looking at the chart to see whether the market is trading above the VWAP or below the VWAP. If I'm going to be a buyer on the call side, I want the market to be trading above the VWAP, volume weighted average price. This is going to be a very important indicator, which we will be using it on the chart. Now, moving back, the OI spurts data clearly telling me Shiva be on the buy side. Done. Moving on. The next one, the IV data. Why I look at the IV data? There are days wherein the option buyers will not be able to make money. Why they will not be able to make money? Because if the IVs are going to be higher, implied volatility on each of the strike, then naturally you will feel that the buyers are there, but you needed further more demand for them to take it higher. I'll be showing you certain levels which I'll be watching in terms of the IV. I'll be looking at 6 strikes, 3 strikes above and 3 strikes below from at the money to get an average of the IV levels. If you look at the current IV level, it is trading somewhere around 30 on the call side, 28 on the put side. If you look at the cumulative data, 3 strikes above and 3 strikes below, I would give it 230 and then 28. Still, the IV on the call side is little higher compared to the put side. That's a good sign. Considering the market is bullish, the IV is also like an higher. I'll give you a simple clue. I'm not like a guy who will be giving you alpha, gamma, Greek. I'm a guy who came from experience. So a simple mathematical, like an experience calculation, which I'll give you. Whenever you see a side which is having a higher IV and a side having a lower IV, lower IV is a clear indication that particular direction is controlled by the sellers. And having an higher IV, that particular direction says that the buyers are more interested and they wanted to see the market moving higher. In this scenario, today the call side IV is little higher compared to the put side IV, which is giving me a little bit of comfort that the buyers are still holding the fort. But I will just show you the historical data, how the IV levels will be playing out. These are data which is not going to be available anywhere, but anyway, I'll try to share this PPT with the host, and they will be able to share it with all of you. Whenever the IV levels are low, which is a clear indication that the sellers do not have much of premiums to write. When you have an IV levels of 10 and 10, you will see the premiums going to be like in 10, 20 or 30 rupees. But if the IV levels is going to be around like in 40 and 50 and so on, you will see at the money is trading at 200, 300 and 400 rupees. There is no direct proportion between the IV levels and the premium it is going to be trading. But the important thing is higher the IV, higher the premium. Lower the IV, lower the premium. One good thing, lower the IV, as an option buyer, we get to have good trend play. Imagine if the market is moving 200 points, I will be able to pocket almost 180 to 200 points at the money when the market is moving in my direction. The same thing, when the IV levels are going to be around 40, then I may not have much of cushion. Even if the market moves 400 points, your premium on at the money will be moving 100, 150 points. The reason is, as the time values keep reducing, you will not be seeing the premium moving higher because everybody wanted to book their profits. The buyers are still holding the position, and they will be thinking, Market has moved, but none of the buyers are coming and buying it from me. Let me book my profits. That's the reason you would be seeing on certain days, though the market is moving higher, your premiums are not moving big, pretty much big. Even today, if you look at this data, okay, so look at what is happening at the money. As a seller, he will be enjoying it. Why? Imagine if he is creating a straddle, okay, both on the call and the put side, 36,200. Look at what he's giving it to you on the call side. Look at what he's taking it away from the put side. On the call side on 36,200, he's giving you 72 rupees, whereas he is taking away 280 rupees on the other side. That's the advantage of being a seller. Okay, he will be able to adjust his position in such a way. Okay, let these guys take it wherever they wanted it on the call side. Let me control the momentum on the put side and call side. Let me not give it to them much. And you can clearly see like in some of the deep in the money and other things will be trading with like in 250 rupees. But that's not the action is happening. If you look at the quantity, it is only 50,000. But the action is happening more on at the money and in the money strikes. So that's a reason it's important for us to look at where exactly the maximum action is happening and how to keep it in our control. If I were a trader, if I'm looking at this data as an option buyer, I will definitely try to avoid. Why? First and foremost, with 1 day to go for the expiry, with 300 rupee premium at the money, this is not a good sign to being a buyer. As a buyer, you needed to try to complete all your action in the morning, especially on Tuesdays and Wednesdays. Avoid any major trades in the second half. That's not going to be very, very good news. Okay. So IV level, what is high and low? You got a clue here. Lower IV, it is very good for the trend day. Imagine if there is not much premium, even the sellers will not be able to enjoy it. What can happen on those days? If the move is happening 100 points on the call side, as a buyer, you be on the call side. As a seller, you be on the put side. So market will be rewarding both the players if you know how to play on the trend. I'll give you another clue. There are days wherein you will see the IV levels being same on both the call and the put. That is the day wherein you will see the zigzag moves happening. Why the zigzag moves happening? The reason is they wanted to adjust the premium both on the call side and the put side. So naturally, on this particular day, you will see the premiums getting eroded, typically similar to today. Okay, so you are able to see a move happening. There is a move which would have given you like a 30, 40% or 50%. Now all the premiums are getting eroded. So if you look at 36,000, in the morning, it went from almost 385 to 550. Now it is back at 424 levels. So clearly the writers are controlling it. They say like, and guys, you do whatever you want. We know how to control the environment for the day. And IVs can give you that clue. In the past, I never realized the IV importance. Once I realized it, then it gave me a complete picture how to use the IV on certain days. Then comes the chart indicators which I use, the volume weighted average price, the super trend, the WMA or the volume weighted moving averages, the volume bars, the RSI, and then the parabolic SAR. Okay, so going quickly into that, considering we don't have much of time, this I normally take it in days to take each and every topic in my mentoring program. But considering there is not much time, I'll just give you a default. VWAP, I keep it at a default setting. Super trend on a 3-minute and a 5-minute time frame, I use 10-2. And volume, I expect normally 50K bar for Bank Nifty and 125K. I'll be explaining you on the chart. RSI, the an upper bandwidth is around 80, lower bandwidth is around 20. Extremely overbought is about 80. Extremely oversold below 20 on a 3-minute and 5-minute time frame. Parabolic SAR, this is going to be one of my friend who will be giving me a clue whether the market is going to be in a bullish territory or in a bearish territory. Volume weighted moving average, I keep a simple moving average at 20. Okay, so how do I use this? What are the things which I follow to take a trade? Okay, so this is the chart. This is from our OI Pulse tool. This is the tool which I have developed over in the last couple of years. The primary reason for me to build this tool is to get me an edge as an option buyer. So today, I was telling you a simple rule, right? I just wanted a 50K bar on the Bank Nifty for me to go a trade. So how will I take a trade? I'll be using all the connecting dot setup, which I was telling you. What are the connecting dots? The Dow future, which was in the positive territory or in the flat territory. Yesterday, the Dow closed in the positive. First one, positive. Next one, the India VIX, which has been continuously falling. When the VIX is falling, it is a bullish one. How do we know that it is a bullish one? I'll just show you. This is how you need it to be tracking. When the market is moving higher and the VIX is cooling lower, that's a bullish scenario. Okay, whenever you see the market moving higher, I'll give you a simple like a rule. I told you about the IV being going higher, the buyers are there. The same thing here. If the VIX is going higher, that means the sellers are coming into the system. So VIX rising along with the market like and moving higher, that means the sellers are creating more position. That means you needed to be bearish on the market. Market moving lower and VIX still continue to rise. That's again a bearish scenario. That means the sellers are creating more and more position. If you'd have seen the VIX levels, when the market went to 18,000, the VIX levels was close to like in 10, 12, 14 maybe. Now, the market has been continuously falling and the VIX has started to shoot up from 15, 17, 20, 23 and 25. It went all the way to 30, 35 odd levels. Now again coming back to 20 levels. What is the scenario which is playing now? It is playing in the first category. What is that? Market moving higher and the VIX cooling down. From almost 16,000 levels, the market has moved almost to 17,000, 17,500 odd levels. And VIX has been falling from 30, 25, 20 now. So positionally, it's bullish. Intraday also, it is bullish. Why I say intraday is also bullish? The primary reason is, if you'd have seen the chart, from the morning levels of 21, it has been continuously falling. There has been a little bit of a consolidation. Now the market is from almost like an 1150, the VIX has been shooting up from almost 20 odd zones to 20.5. That means VIX moving higher, market falling, which is clearly not a good sign. From the higher level, the market has been falling, the VIX has been shooting up. That means intraday, there is a small bit of a reversal happening. We needed to be a little careful. Now, moving on, IV data, more or less, we see the 29.30 on both the call and the put, which we are looking for the Bank Nifty. If we wanted to look at for the Nifty, I'll just show you. It is around 18 and 17. More or less, it is in the same category. Even here, they're like not able to give you like a much of premiums. I think the like a Nifty is trading at 160 points. So here, 40 points, in spite of the market giving you a 160 point move, even if you can look at it, 17,200, which is deep in the money. Are we able to get like enough moves? No, the IV levels are around 30. So whenever the IV levels are going to be higher, with the expiry is just 1 day to go, you're not going to be getting much of premium. As an option buyer, this is going to be the most difficult period for you to get maximum out of it. Don't try to hold the position. On a day like today, that's where like in many option buyers lose out. Why? They wanted to capture the entire rally. That's not going to be possible. So you needed to be ready to accept it. Whatever that has been offered, take it, get out of the market. Because it's not you who create the position, it's the sellers who create the position in the options. So you needed to understand that. Okay, moving on. I told you about the 4 indicators which I use, right? I'll be showing you that. VWAP, default, the WMA 20. So do you see this red line? That is the VWAP, the most important indicator on the chart for me. Why? That is the area wherein the tug of war happens. Any gap which you see between the VWAP and this candle bars, this is the gap which will be the profit for the buyers. If you're a future buyer, this will be the profit. When I say profit, maximum big players who operates, their average will be somewhere around the VWAP. What is VWAP? Volume weighted average price. If you're a large player who comes into the market with 1,000, 2,000 crore, your average is going to be somewhere around the VWAP. So that's the reason most of the time the action happens near to the VWAP. Okay, that tug of war is going to be happening. Who's going to control the market? Today, as of now, the buyers are still controlling it. As long as they are not able to let it go below the VWAP level, they are going to be having an edge. But if they are going to be closing exactly at the VWAP, the future players are saying, guys, we will shake hands today. We will only erode the premiums on the option segment. Let's not do anything major in the in the future segment. We will shake hands, come and take a call on another day. Okay, so that is going to be the gameplay on the futures. But as an option player, that is where most of the players tend to lose out. Why? They go and look at individual options. Rather than that, you should be looking at the future chart, because options are going to behave based on the futures and the spot. Though intrinsic value and everything is going to be calculated based on the spot is not a traded instrument. Futures is a traded instrument. Future is going to be determining which way the market is tending to go, higher or lower or whatever it is. I believe the future spot is trading at 36,279 and the future is trading at 36,295. So it is currently trading with a premium of close to 15-20 rupees. So that means still there is an interest which is there among the future buyers stating, I'm expecting another 15 to 20 rupee move. That's the reason they are ready to buy it at a premium. That means by tomorrow, I am ready to get this price moving another 15 to 20 rupees. So they are ready to put that extra bit of money over there. Now, VWAP, we saw it. That's one of the crucial indicator. And then the super trend. Do you see this guy who's in the like in a brown and then a green? If this guy is above the candle, that means it is a sell signal. If this guy is below the candle, it is a buy signal. It's a pretty simple, neat, like, and as the name indicates, the super trend, it will give you like a perfect clue. This is what you needed to do it for me. Okay, so what is currently he's saying that? He is below the candle. That means he's saying, Shiva, you can go ahead and buy. So will I be buying only just because of this particular indicators? No. I would need other guys also to be like in giving me a clue what I needed to do. Then comes the WMA. Do you see this guy, the blue line? The WMA is nothing but the last 20 candle, like a moving average. So in this scenario, what the WMA is doing to you now? Can you see that? This guy will act to you as a first, like in a level of support. Always remember, when a large move happens, this WMA will be the first level of support. Super trend will be your second level. And then the VWAP will be the third level. So use these three for you to get a support trade which needed to be done. If you're looking for a support trade, if the move has already happened, then I will use these guys. Now, then comes the parabolic SAR and then the RSI and then the volume bars, which I will come to you. Parabolic SAR, the same scenario. If this guy is below the candle, buy. If this guy is above the candle, in some scenarios, it is above the candle, that means it is a sell. Always remember, whenever the move happens, this guy is going to be the most parabolic SAR, going to be the first one which will indicate to you whether the trend is reversing or not. In the morning, the move was happening. The buy was happening at around 11.6. You can clearly see the first one gone above the candle is the parabolic SAR. From there, the sell-off started. Okay, this guy went above. Then came the super trend, broke it, and then went above. The WMA went above. And then the last one will be the VWAP. So now you guys are looking at a break happening. Okay, a big break happening on the downside, almost a big bar. But is it giving me a conviction to go and chase this one? No. These are candles which is making the people who have been option buyers to lose their money. I was telling you the premium adjustments which will be happening, right? This is how they do it. They make a move and then make a player on the put side and the call side lose out their money, reduce the premiums, and then stay in the same day. Sometime back, if you'd have been looking at the premium tab, on the option premium tab, still the option premiums on the call side is a little higher compared to the put side. Now look at it. Still it is around 230. When we started the session, it was around 260 to 220 odd levels. Now it has come down to 230 to 216. So what are they doing now? In the last 20 minutes, they have taken away 20 rupees away from the at the money prices. So this is clearly going to be the gameplay for through the day. So they are going to be just doing this, and especially with another like in 2 hours to go for the like a day session, you will be seeing more and more premium erosion. Always remember, when the IV levels on a Wednesday, if it is going to be more or less above the 20-30 mark, both the sides, if it is going to be having the same level, then you will lose the premium. So what is the ideal scenario for me to get into a like in a buy mode? I would ideally see today, in case if the market is moving higher, I want the IV on the call side to be 30, put side to be 20. A 10-point difference between a call and a put. And if the market is moving in that particular direction, that will be a perfect recipe for you to make big money. Okay, so avoid. And if you're an option buyer, if the IV levels are going to be like a more than 40, if you are a small time retailer, I'm telling you, you needed to take a vacation. Don't play in the market because the premiums are going to be higher. One bad move, many people will be getting wiped out. That's what has happened yesterday as well. Many people, they couldn't survive on 1-2 candle, which happened in the second half. I believe yesterday, many of you would have played. These 2 candles is enough to wipe out all the bulls. And then they made sure they came into the made people to enter on the put side. And then they took it higher. Many people got trapped here. Now today, the same scenario is happening. Okay, many people would have got trapped if you have been thinking about a trend day, which has not been the case. What happened here? This is the perfect recipe for me to take a two candle theory. What is a two candle theory for me? When all the things which I was explaining you getting aligned, like Dow futures, the India VIX, the OI spreads, the IB data, I would be following this. When I look at the volume bar, if you look at two consecutive bars of more than 50K, that's a cushion for me to go on the Bank Nifty to take a trade. So when I'm taking a trade, I would be taking a trade on the third candle. First two candles giving me a confirmation that yes, the buyers are flocking in on the futures. I can go and take a trade. Imagine in this scenario, we have got a signal. Okay, we are like generating a signal in our system, the OI pulse. It will give you a signal. So in is my entry, out is my stop loss level. Once it is above, you can clearly take whatever the move that you needed it and then keep on moving it higher and higher and higher. So in this scenario, 36,310 is my entry level, 36,199 is my stop loss. Imagine you are taking a trade at the third candle. The next two candles is more than sufficient for you to get your intraday 1% or 2% or whatever it is. Now, look at this particular two candle. What has happened here? My PSR has gone above, super trend has gone above, it has broken the VWAP, it has gone below. But are we getting a two candle theory here? The first one, it was not with more than 50K, it was only with 42K on the downside. The next one, from the lower level, the buyers have been flocking in. Why the buyers are flocking in? I believe there is a signal on the Nifty. Nifty is clearly broken down. Okay, though the Nifty is broken down, I would still not go and take a trade on the put side at this current juncture. The reason being, it is almost 2 in the afternoon. The OI data is currently suggesting me, Shiva, there is not enough clue for you to go take a trade. Why I say that? On the call side, they have created only 31 lakhs for the active strikes. And on the put side, they have created 1 crore 80. What is the clue here? If the riders are not creating any positions on the call side, what is the fun for them to take this market lower? They are not going to be making any money. They are creating more positions on the put side, which is clearly suggesting me, Shiva, all these move which is happening downside or a fake move just to erode the premium, nothing else. So don't try to do that. The same thing is happening with the Bank Nifty as well. If you look at the Bank Nifty, 32 lakh shares are created on the call side compared to close to 1 crore shares on the put side. Imagine if I would have been a buyer, okay, where we should be concentrating on the call side. Every dip is going to be a golden opportunity for me to buy unless and until the chart breaks down with volume. So how can I identify that I needed to be there on the put side? Shiva, you are telling me like, and once it is below the VWAP, it is like in a put or like in a sell the futures. Yes, I can sell the futures provided it meets my parameters. What is my parameter? 2 consecutive candles with more than 50K. If you look at this, 75 bar and then a 102. More than 2 consecutive candles, then it is trading above the VWAP super trend and then the PSR. Every bit of an information is good except the RSI part. What is the RSI part here? If it is above 80, then it is extremely overbought territory on a 3-minute time frame. We are looking at 3-minute time frame. So if it is going to be above that level, it is going to be a tricky one. So in this scenario, I needed to wait till the RSI cools off a bit and then go and take a trade. So now, imagine we got a signal here. Entering here, these 2 candles are more than sufficient. As a scalper, once I enter, I will just go into the trade, trail the positions. I'll just show you some of the trades, considering we have another like in 15-20 minutes. I'll just show you some of the trades which I have taken in the morning. Then you will understand from a scalper's mindset. In the morning, I was bullish. Why I was bullish? Because yesterday data, there was a huge short covering which happened. And then provided by that, in the last 30 minutes, the market almost literally closing it at the day's high. All these happened with a good short covering. That means the shorts have gone out of the system and they don't want to again create any fresh position unless and until there is someone who's creating a position to take this market lower, which has not been happening. Now, in the morning, I entered on the same candle. If you look at this, 9:15 was my entry. I entered this particular one was 35,900. All these are more normal, more like in limit orders. So 515 at 9:15.07 up to 9:15.17, I was able to buy in a range between 500 till 440. If you look at it, 500, 469, 430, 420, and then again, on the move up, I'm buying it. What I did is, whatever the quantity which I bought it at the lower level, I immediately square off around 40 lots. And then moving on, again, the market is moving lower. Again, I'm buying it. The reason is, I know this is the range where I'm comfortable with. And I'm buying in deep in the money. And once it is moving, again, I bought it. Again, gave up some quantity at around 440. As a scalper, morning trades are very important for me. Why? I needed to be real quick in terms of like in getting my trades done in a fast-paced manner. Always remember, if you're a scalper, your intention is to get in and get out, especially in the morning trade, because morning trades are the most risky trades. It can take you a large amount of your profit or your capital. I always set the benchmark in the first few minutes. The reason is I wanted to enter, exit also pretty quick. So by 9:17, the first trade is almost done. Again, I'm entering at 9:19 to 9:26. And by 9:28, 9:29, I'm out. I'm again entering on the same strike because it was playing in the same range. But usually, normally, you will get the move happening in the opening few minutes. Today, it was not the case. Till 9:30, the move was not happening at all. Then the move happened. Now, I'm going deep in the money. Always remember, as a trader in the morning, I play in the money. And then as the moves go higher and higher, I will go deep in the money. The reason is, on Wednesday, the theta effect will be more. If you're going to be taking a trade in the OTM, the premium move is going to be very slow, whereas in the money and deep in the money, whatever the move that the futures is going to be offering, the same move is going to be happening in the spot as well, or the respective strikes as well. So in this scenario, we entered again 570, 580, 930, 932. Again, entering 934, 939, I'm out. 520 to 532. Again, 570 to 535. The most important thing as a scalper is I will be keep scalping. And if you look at it, there are few trades which would have gone with the opening trade. There are few trades which I would have gone at the money and in the money. Why I needed to be a little careful in terms of today, the premium erosion is happening from the higher level, the premium erosion is happening. But if you'd have been seeing, many people would be saying, Shiva, like, can we hold it for a little longer? There are days wherein when I hold it for a little longer, you will lose out. With a 20 lakh capital, if I'm able to make 1 lakh within 30 minutes of morning opening trade and other things, with only like a buy and sell was like a 45 lakhs overall put together, then this makes me like an almost, I'm getting like a 5% return on the 20 lakh investment, which I have it in my account. Then this is a morning trade, and there are few trades which I would have done it based on the intraday moves. I will just show you. I was telling you about the 2 candle theory and other things, right? What was the 2 candle theory timings here? It was around 10:21. If you look at it, I would not have gone aggressive at 10:21. The reason is, at that particular time, the market was already sitting on the RSI at extremely overbought territory. For me, the RSI territory is between 50 and 75, best time to enter. 75 to 80 is the profit booking zone. 80 and above, it's a overbought territory. That's the reason I went with a small quantity of 20 lots over there. And I was trying my luck to see whether there is going to be an additional move, the RSI going towards 85, 90, and so on. So here we entered, exited, done. So that particular trade is done. I'd always look at to trade in multiple systems. The pure reason is, as an option buyer, once I make money in one account, move on to another one, try to take trade, move on to another one, keep trading that way. This is another one which I've taken it at 10:42 to 10:47. So what was the reason here? Go and look at the chart here. 10:42, where is that? Once the 2 candle theory is done, if I'm able to make 1%, then my next trade will be at the support trend, like a super trend level. Whenever the 2 candle theory plays out, when the market has moved with the volume on 2 candles, the next opportunity is only going to be near to the super trend. So if you look at it, on the way down, first time there will be a support at the super trend. I'm trying to take a support trade, nothing else. When I'm trying to take a support trade, I need to be real quick. So 10:42, I'm entering into a trade. Look at that, 10:42 to 10:47, 530 to 500 level. I'm buying it. This is the level. Sorry, where is it? This is the level. Exactly near to the super trend level. And this candle is enough for me to get an exit. Can you see this? What is the timing? 10:48, 10:49. This candle is more than sufficient for me to get an exit. So how much money we made on the trade? 36,000. You need to be real quick. We made around 22,000 in a matter of 2 minutes. Now, the next trade. What is the timing there? It was around 11:44 to 11:47. What was the reason for me to take a trade at 11:44 to 11:47? If you look at this particular bar, it came down. In the morning, you see more of green towers or the red towers. I see more of green towers, and the OI data and then all the parameters in the book is giving me a positive clue. So this particular candle is more than sufficient for me. Moreover, my biggest support is going to be near to the VWAP, which is available. And the fall is happening without any volume. If the fall is happening without any volume, you can always expect a one bit of a support near to the VWAP. That's exactly as happened here. Now, what are the trade timings here? 511 to 500. This is the level. 1045 and 1048. I am out. 1048 is nothing but the following candle. That's it. So I took a trade here, out here, and we made around another 16K, 1,500 quantities, a quick $10. That's it. 40K is done. Then move on to the next one. This trade, I think this particular system, I did the opening trade as well, along with the other one. So here again, we entered at 420 to 430 odd zones, exited some quantity at 440, some quantity at 427, made some quick bucks, and then another quick entry at 560 levels at 929, because till 9:30, I will be playing on the opening day trades based on the previous day data, nothing to do with intraday. Only after 10 o'clock, I'll start following the two candle theory, and then the support trade, and then the rejection trades. All these will be played. But one thing, if you'd have noticed, I've not taken a single put trade today. The reason is the OI data on the trending OI was extremely bullish. Whenever you get this kind of a data, I wouldn't be too keen to take a trade on the opposite direction. Always play with the trend. Even as a scalper, it's always important. We needed to play with the trend, not to take a trade on the opposite direction. So here again, we would have done almost 10, 12 trades here, 20, 12, 9,000, 2,000. And if you look at it, some of them would be trading below our buy price. Some of them would be trading above our buy price. As a scalper, should I be worried? No, because I'm in and out of the trade. We made another 45K here, and then another trade on this particular one. Again, 957, 1030, 1050, 1114, 1124, and 1140. So all these are again a scalping trade opportunities made around another 47,000. So overall, I have placed around 20 lakh each in 4 of these accounts. Okay, using the 20 lakh, 80 lakh was my overall investment. But did I use my 80 lakh all in one go? No. Once I close my particular trade, move on to the next one. Once I close a particular trade, move on to the next one. That way, you have two things. One, as a buyer mindset, many people will lose out. Why? Imagine in the morning you make some money and then you tend to lose out in the second half. The reason is when your profit from your account comes down, you automatically think that I made around 40K in the morning. Somehow now it has come to 30K. Let me get that 40K back. In the process, you tend to lose out. What you can do, keep diversifying your funds. Okay, even if you have a buyer's, if you're having 10 lakh, keep in 5 accounts with 2 lakh each. As a buyer, your risk is completely different from a seller's perspective. Seller, he has an unlimited risk, but he has to have an edge in terms of adjusting his position. As a buyer, don't deploy more than 20 to 30% of capital in any given trade. Keep only 20 to 30%. And even with 20, 30%, you will still be able to make significant returns. Okay, even today, if you are a buyer, try to be there on the call side, not be on the put side. Though the data will be showing you every bit of an information, as I told you, the market is not in a position to go down. Why it is not in a position? Because the trending OI data and all the data which I'm looking at is trying to suggest me, Shiva, these guys are only trying to take the market higher from the lower level, only to trap the people who are going to be holding the position. But if you are a scalper, you will be keep making money. And on the IV side, in the last few minutes, the put IV is around 29 and the call IV is around 28, which is clearly suggesting me, Shiva, whatever the move that's going to be happening, it's all going to be only premium erosion. Do not give it back. And most important thing, the trending OI data clearly suggesting the writers have not created any significant positions on the call side. So don't expect a major downfall happening for the day at this juncture. If you look at this OI data also, the open interest is continuously going down. Let me also open the Bank Nifty for the next series to tell you whether the OI is continuously increasing. Yes, when the market is moving higher and the OI is continuously increasing, that's a bullish scenario, which the market is giving you a clue. But what has happened with the Dow futures now? If you look at the Dow futures, when we were trading, and when we started the session, it was somewhere around 40, 50 points. Now it has gone to minus 100, which is not going to be a good sign. I would love to see the Dow is also going into the green territory rather than in the red territory. Whenever you see that, then that means you can expect some kind of a resistance to be coming in at a higher level because the Dow is moving in the opposite direction. Unless and until the morning highs are not getting cleared, do not even bother to go on the long side aggressively. Okay, we need the morning highs to be cleared for us to be going at a good pace. So currently, HDFC, ICICI, Kotak, all these guys are in the green. And if you look at the contribution also, ICICI is leading the contribution with 136 points, Axis is 100 points, HDFC is 70, Kotak with 50. All these guys are giving you a good move. None of the banks are in red. But the only problem is the global market cues have changed a bit and you're not able to get a clear-cut move above this level. Why you're not able to get a clear-cut move? Because they are adjusting the premiums and they know this being a Wednesday, they will be able to maximize the premiums consolidation. So usually on Wednesday afternoon, the IV levels tend to go and close around like in 20 to 25 odd levels. Even if you'd have seen in the past 1 week from 40, 30 and so on, now slowly the IV levels are coming down. Why the IV levels are coming down? That means the buyers are exiting their position. They know with 1 day to go for the expiry, if I'm going to be holding my position way too long, I'm not going to be making any money. So that's a reason Wednesday afternoon as an option buyer, it's better to stay live. And when you're getting an opportunity, just scalp, make money, keep on moving. Why you needed to hold your trades for too long? You look at any of the trade, I might be holding beyond like in 15, 20 minutes. 9:57, 59, I'm out. All these are manual trades, nothing like an automated because I'm a scalper. Though I have built a system and other things, this system was built purely like in foreign, from a buyer's perspective. I've also created a setup wherein it will give me a clue whether the market is going to be giving me a move based on the whatever the 10 dots which I told you, the Dow, the VIX, the volume, active strike, IV, the VWAP, super trend, RSI, price move, everything giving me a clue that the market is on a bullish trend, except the daily trend, because from the day's high, these guys have been only adjusting the premium. Now, look at this, what has happened here? The Bank Nifty, it's just playing the spoil sport, playing near to the VWAP, nothing else. It is purely based on the IV levels. They just wanted to eat the premium. Guys, as an option buyer, you needed to understand you're working with certain limitation and you needed to know how and when you needed to be little aggressive, when you should not be little aggressive. Today, I would typically give it back, tell the sellers, guys, you guys enjoy it. We have got an opportunity in the morning to make money. Now it is time for you to make money. Keep enjoying it. And if you're able to follow this setup with the discipline, I'm telling you, you guys will definitely see it like in a consistent money, which you can make it. Was there any trade which has gone into the red today? No, nothing. As an option buyer, many people say, right, Shiva, it is going to be very difficult. Even on a day like this, if I'm able to get like in a 2.5% ROI or like in more than 5% ROI, I will be more than happy. Okay, so that is the key thing. That's the most important element of an option buyer. Only thing is you need to know when to enter, when not to enter. So what we have designed is, whatever the learning which I have given you, we have also automated it using an AI. Okay, these AIs will also help you out to understand, Shiva, when you should be looking at to take a trade, when you should be avoiding it. Whatever the setup which I have explained it to you, we have done it. But we are in the process of getting this algo also done. But I am more of like an old timer, you can call it. I've been in the market since 2007. But for me, the fun is when you manually type, when you experience the fun, the adrenaline rush and other things, that's a different feeling altogether. So like some of you would be looking to like see how the trade is going to be done, right? I'll just show you a quick trade here. Okay, so normally if I'm a trader, this is how I normally do it. So I've entered some like in quantity here. So around like in 150 quantities here. If I'm a quick scalper, what I normally needed to do, if you look at it, I've entered close to now. I'm trying to buy as many as possible. I'm trying to buy it at the ask rate. Okay, some of the trades are not being like done. I'm just going to be canceling it. Once it is done, what I will normally do is I will look at my average buy price. So if you look at it, So we bought it around like in 415 odd levels. What is the market currently trading? It is trading at 409. So imagine I'm taking a trade between 410 to 415. So my average would be somewhere around 413 odd zones. Once it is above 420, 425, I immediately keep trailing it. So currently, it is just playing around this VWAP and the super trend line. I'm expecting more support to be coming in at the super trend. I will just look for support here, take maximum quantity, and once it gives me a big green bar, I immediately exit it. Now, currently, how much quantity we have? We have around 250 quantities. Look at this. We have been buying it from 1405 to 1406, from 415 to 409. We have been buying it. So my average on this BEP would be somewhere around 412 to 430. In this scenario, if you look at this BEP, what is the BEP? Break-even price. Okay, since I have already traded on this instrument, I have some profits. So imagine, even if I wanted to lose out on this trade, unless and until it goes out below 364, I'm not going to be making a red on this particular line item. But what in case if it goes in my favor? Considering whatever the move that has been happening from morning, the buyers have been the ones who are holding the fort. Only problem is the premium erosion is going to be happening. Why? The spot is trading at 36,268, something which should be trading for 278 for tomorrow's expiry. If the expiry is closing it at the same level, it is already having a premium of close to 130 to 140 bucks. So in this scenario, as a buyer, I'm not at an advantage. So what I needed to do, 250, keep it ready, keep my trailing stop loss. Imagine if it goes above like a 415 mark, I will be above my cost. Okay, I will be into profits as well. I'm just seeing whether it can cross the 420 mark because the premiums are not going to be moving much today. So in that scenario, I'm just showcasing a trade, how I will be doing it in case of the moves happening pretty quick. So once it is happening in your favor, keep trailing or you can book your profits. Done. So imagine as a scalper, my intention is to get in, get out. 415 to 410 we entered, 417 we got an exit. So this is how, as a scalper, I would be doing my trades. Not necessarily, many people think that scalper means you will be doing the trade for the whole day. That doesn't mean it. Even as a discretionary player, we needed to have certain rules, certain processes that we needed to adhere to it. And the most important thing is you need to know when to play, when not to play. If you're going to be following all of these setup, I'm promising you, I think you will definitely see bigger rewards coming to you consistent manner, even as an option buyer. Guys, if there is a seller, there has to be a buyer. Okay, not necessarily only sellers can make money. It's about entry and exit for each and every individual. So don't think that buyers won't be able to make money. Even buyers will be able to make money. Scalpers will be able to make money. Sellers will be able to make money. Understand the risk and need to know when and where you needed to enter, how you needed to enter. And once you are done, then you should be able to do it. So there are a few people who have been asking me what is a slippage? There is no slippage. Why there is a slippage? Because I'm entering all at a limit price. I'm not entering at a market order. Guys, look at this. So imagine I'm taking a trade here. I'll just show you. There is no slippage at all. What is the slippage here? Can you see this? I'm just buying it at the ask rate. And once it is above your buy price or sell price, you can always trail it. You're not placing a market order. That's the beauty about it, right? So now I'll just show you. We have bought from 479 to 479. Have I seen any slippage? The market was trading at 479. I've taken the trade at 479. 7 lots which we have bought, 483, 484. Am I going to be losing this trade? No way. Now look at it. There is a move which has happened wherein it skipped the price. In that scenario, if you'd have clipped a market order, then it would have triggered it. In my scenario, it has just moved it. So what I needed to do, revise it. Once it is above my buy price, if you feel that no, Shiva, it is moving way too fast on the downside, revise it. Otherwise, you can leave it and it will trigger it once it comes to 483 odd zones. Now, 479 to 483, we place the buy and sell manually. We didn't use the system. So everything is going to be at the price at which you wanted to buy. There is no slippage at all there. So what is the advantage of moving splitting the funds into multiple accounts? One, there are days wherein one particular broker may not work, right? You don't need to depend on one particular broker. Each and every one is a different broker for me. So what I normally do is Keep it in 5 different brokers. There are some days wherein I may not be able to enter the opening trade in some broker. Some brokers will be like having an issue and other things. Use the other one. Don't keep cribbing that like in my broker went down today, I couldn't take a trade and so on. Never do that. That's the advantage, right? But this is again for the people who are having large funds. But people who are having like in 1 lakh, 2 lakh and to take trade, you needed to stick to like with the discipline on like maintaining it properly with a good broker and so on. But when you have a large account, 2 things it can help you. One is it's a disaster recovery for you. Second thing, it also be in a bigger disaster recovery. The reason is our human minds are monkey minds. When you're in a losing trade, your ego will not fulfill. What you will try to do, you will keep on averaging your losing position. Never do that. If you're having in position and if you're able to like and convince yourself, Shiva, I needed to book a profit or a loss, you do it. If not, at least if the maximum loss that you can incur on that particular login is going to be 20 lakhs. Guys, these are all things which has come from me based on my previous experience. And I normally use my previous day profit as my stop loss. As an option buyer, and especially in this market, you cannot be using like a 10% or 5% rule as a stop loss. Every time it goes 200 points and then moves another 700 points on the upside. So never do that. So the best thing is you keep your own principle and stick to it with discipline, and you will see a bigger and a better things you will be able to do it. So in terms of OI Pulse, this is an inbuilt software which we have done. It is going to be providing you all the data, what you wanted it in the live market. And you will see like in some of the strategies are going to be pretty unique, which has been coming out of my experience. I use this open and high strategy in the morning. The reason for me to be bullish on the call side today was also one among this. So with all this, I hope this 1 hour, they asked me for like in 1 hour, I try to give you the best, whatever that is possible. But I hope you guys will get to know more about this in the coming sessions actually. So, okay, another question. People are asking me, Shiva, what about the brokerage? You will be end up paying. That's a beauty, right? We have tied up with a few brokerage firms wherein we get a zero brokerage or a limited brokerage, wherein a fixed brokerage. We pay only close to 3,000 or 4,000 a month. We get to trade unlimited. What more you need? Guys, that's advantage. Okay, you needed to pick and choose a broker and trading terminal. I always use Nest platform. 90% of my broking platforms are from Nest, which is a user friendly. And you saw how quickly I'll be able to enter and exit into a trade. That's the advantage of having a setup which is comfortable to you. So always remember to go with all these parameters, then it helps you a lot. And avoid your trades after 2:30. Okay, so I will take few questions in case if there are any, and then I will give it back to the host. I think you guys would have been hearing a lot of algo stories in the last 2 days. I think I would have given you a little bit of a different perspective from a scalper's mindset, but I know the time is very small for me to give my complete setup. Probably sometime in the future, I will definitely help you all to understand it. And in case if you guys wanted to reach out to me, on the last page of the PDF, this is my contact number and our Telegram channel and my Twitter ID. Please do ping me on that, and I will be happy to share or help you out in case if you have any queries on the sessions which I have. Yes, it is totally away from the quant-based system, right? So you guys will be totally engrossed with the quant-based system, but this is totally different altogether. So expiry date. Guys, expiry day, we have a different setup. Yes, it works, but I also have a strategy which we developed on expiry day, how to play on expiry days. These are all inbuilt tools which we have done it, how to identify whether it is in a short covering, long build-up, short build-up, and long unwinding. Based on that, we will be taking a call for the expiry day trades. Guys, I have in 3 or 4 setup. This is the only thing which I do. This is my bread and butter, which I've been sharing it for all the 4 or 5 years now, which I've been doing it since 2016, and everybody knows it who have been attending my session. So these are the strategies which I use, and it has been giving me the results. So I don't need to go and look for anything else at this juncture. Okay, so thank you guys, and I hope the session would have helped you all. And I will give it back to the host.